Hayden Locke, President and CEO of Marimaca Copper. We're developing the Marimaca Oxide project in northern Chile. It's a really unique and exceptional development stage copper project, stands out from the peers in many ways, most importantly from its return on invested capital perspective and a reasonably short timeline to development, which is unusual in the copper space.
Hayden, good to see you. Wanted to talk about the infill drilling that you've done. A few unexpected, delightful numbers coming out of that. I'll talk about that in a minute. But you come back from Chile and you've been down. You've been speaking with government, or government has been speaking in the same room that you've been in. And what can you tell us?
Yeah, we were down for CESCO Week, which is the Chilean equivalent of the LME Week. A very important date in the calendar for the Chilean copper industry, the mining industry in general, but specifically copper. And there was a lot of talk about the constitutional reforms and the royalty bills. And obviously there's been quite a lot of news, which you've addressed in other interviews with people in the industry with regards to rumours of nationalisation. So it's a very interesting time to be down there and just hear the new Minister of Mines, Marcela Hernando, just commenting about the government's perspective. And it was really refreshing to see the government being quite aggressive in terms of their response to the rumours of nationalisation, saying under no circumstances do we want to nationalise the industry. And in fact, we want to grow it. And then at the same time, you hear Codelco saying publicly that they want to take some of their assets, their non-core assets, and privatise them, find private investors to come in and take those assets forward. So I think we're really starting to see the government waking up to the damage that's being caused by these headlines, by these, these sort of radical few. The other really interesting aspect in all of the discussions we've had is, these radical proposals are being made, but not one of them has made it through that 2/3 vote that Alex Black talked about on that, really informative interview that you did with him about the Chilean constitutional reforms. So I came away from it feeling much more positive. I was already pretty positive, but, really starting to see that the government's engaged and moving us in the right direction.
Well, that's really strong. It's good feedback and good to know, but it's really kind of strong statement of intent from the government, which is fantastic. I'm really fascinated by the Codelco position because you're talking about offloading some non-core assets and selling them to private companies. That doesn't sound like a nationalistic mood at all, does it?
Exactly the opposite. And Codelco is the state-owned enterprise. So I think they're really reflective of what the government is thinking and the government is saying. Yeah. So it's a pretty interesting one.
No,
could create opportunities.
Yeah, no, I just thought it was a big thing that most people seem to have missed while these rumours persist, that should go a long way to kind of easing people's concerns about investing in Chile. Now, what else were you hearing when why were you over there? What was the purpose of the visit, apart from attending the conference?
Just making regular visits to go down into country, taking some analysts and investors to site. It's one of the big things that we talk about is the infrastructure and locational advantages of our project. And there's nothing like seeing it. So we wanted to get some analysts and investors down, and the feedback was, wow, it's even better than we thought it was. So, other than that, just being in country, right, the project forward.
And offloading non-core plant as well, I noticed. Get a bit of cash in. So why do you describe it as like not non-core? Could it not have been some use to you?
The Marimaca, it was originally part of the strategy to use that Ivan plant as a development, but Marimaca project is so good, and the Ivan plant is just a little bit too far away that it really would have been sort of degradational on the return on invested capital for the project. There are other better options than using the Ivan plant, which is subscale and a little bit far away. So at that point, it's on care and maintenance. It costs us money. We didn't see any real opportunity for us to create value there in the short term, and the group that came in made a very generous offer.
Right. Okay. And you've kind of struck a deal there to kind of earn money over time, which will be, in fact, what are you going to do with that money? What's a better use of that money?
Well, we're drilling at the moment, and these drill holes that we'll talk about today have really opened our minds to the possibilities to the south of the Marimaca Oxide project. This project is, as we said in one of our announcements, we're still in the early stages of discovery. That's what these drill holes are telling us. We've got a lot of work to do and a lot more places we can spend that money wisely to create better returns for our investors.
Right. Now, it was infill drilling. You have described this as, you weren't expecting what came back. How's this? In fact, why don't you tell us what you saw? And maybe I think we said before we started, you might even get the verify up and sort of show us what we're looking at here. But I'm more interested in what it tells you, and therefore what do you now do, because it informs future decision making. Because this might be a little bit bigger than you actually thought.
It's a great tool for visualizing, and we did a little video on this just to help people visualize it, because we can say it's extensional or it's not extensional or whatever, but what you're seeing here is the 2019 resource block model shell. So it's basically the limits of the 2019 resource, which is what the PEA is based on. And these red intersections here are the drill intersections, and as you see, they're all virtually outside of the 2019 pit shell. So that means they're extensional. Now, we were expecting mineralization here, but we were expecting lower grade mineralization. So if you have a look at the 0.2% pit shell, which I'll put up now, grade shell, sorry, we were expecting lower grade mineralization in several areas down here, and we hit the mineralization at the right interpreted levels. But what came out of it is they were significantly higher grade and significantly broader intercepts than we had originally thought. The interpretation was from the drilling previously done that this area was thinning. And what these drill holes tell us is actually it's not thinning, and it could actually be expanding again and going into a broader zone of mineralization. So, it really was a pleasant surprise. I think the biggest surprise was the grades. We were in an area where we had interpreted 0.2 to 0.25, 0.3%, above the economic cutoff grade, but certainly not the higher grade core. And if we look at the sort of 0.4% grade shell here, this is now, all of these drill holes had significant intersections at above 0.4%. So when we rerun our resource interpretation, we would expect that 0.4% shell, which is really economic material for us, to extend quite significantly. So this is adding tons, it's adding grade, it's adding copper. And, the biggest question now is what happens further to the south. And Sergio's now got the dilemma of, well, do we start diverting some of our resources to looking at extensional step-out drilling down to the south? We almost certainly will look at that. At the moment, we're in the middle of the infill drilling campaign, so we can't really divert immediately, but it's all indicating that this project is going to have a step change in scale, which is the only weakness, as we discussed previously, of the project.
It is absolutely, and this is what I want to get onto with you, because we've done a few programs now and panels and sessions with mine builders, people who've actually gone and create billion-dollar businesses, and they say that there's a way that you go about it. This infill drilling and what's come back are these higher grades, big intercepts in areas where you weren't expecting it. It kind of gives you a little bit of a headache, because a couple of things happen here is you've got to make choices about where you divert capital to, or whether you go and raise more capital because it's going to be bigger than you thought. And the come to Jesus moment for me, or the conversion for me, was a few interviews ago when this stopped becoming a small but perfectly formed project into something which could demonstrate a possibility of a project at scale and possibly global scale to interest the big boys, right? Now, you've told a story to market, and with this new information, you may have to change your plans, change your plan of attack, because there's an opportunity in front of you. So you've got to get that balance between where you spend your capital, value creation, accretive value, as the cliche goes, and managing that narrative in the market as people say, oh, they didn't do what they said they were going to do. So nice set of problems to have, but what do you do? How are you going to come at it? When are you going to talk to the market about how you're going to come at it?
Well, so the intention now is we're moving forward with the infill drilling, and look, that step-out drill results are very nice. At this stage, is it materially going to change the scale to change our view that actually what we've got is now a globally significant copper project, and in my mind it's 50,000 tons or more of production per annum is kind of the threshold. Do we need to wait for more tons, or are we now in a position where we can move forward with a project which is something that will have the market sit up and take notice? And I think we are already at that point. So we will continue to move forward with our development plans. We're not going to delay those. We'll continue to move forward with the feasibility study and then with the permitting on the current project. But we will almost certainly need to put some money to work to find the ends of this deposit, even if it doesn't make it into the measured and indicated category, if it's just inferred, so that we can paint the picture to the market of what this could be in the future, which is start at a certain size and then scale up in the future. So we're going to continue to run in parallel, basically.
Okay, because the other kind of really interesting conversation we've had recently was around the Lausanne curve, right? You know, in terms of that kind of, feasibility development phase where people lose interest and they go and trot off elsewhere before that, ascent into production. They felt the best way to negate that disinterest, that kind of boring period, as it's sometimes called, is to sort of layer the stories. So what I'm hearing from you is you will continue along the current path, clearly with the studies and looking to get into production, but will not ignore the exploration upside component of this. Got it. Okay. Makes sense. The question, I guess, then is, are you capitalized to be able to do that? Or do you think if this story resonates that you're going to be able to raise more money?
Well, we know we'll be able to raise more money. We have lots of people offering us money, but I think the biggest question is, what's the right price for us to do that? We already have a very firm view that we're going to have a resource upgrade at some point in the middle of the year. And so logically, we don't want to raise money prior to the market understanding what we're thinking internally in terms of what that scale could be and the material increase in value that will come along with that. But as with all junior mining companies, you always need more money until you're in cash flow. So there's two separate aspects of our capital requirement. One is the development aspect, which will lead up to a financing discussion, and the other is the ongoing exploration work, which is quite a lot cheaper than building the project, but not a small amount of money. But we now see some serious opportunities for the company to continue to grow this resource.
So the kind of disconnect between copper price and copper equities, we should ignore that because if you're saying people are offering you guys money, the institutions are aware of what's happening in copper, the EV thematic, or whatever they believe is driving this thing, whether it be infrastructure, infrastructure investment from governments, etc. You feel that if you need money, it's there if you want it. The question for you is timing and how cheap that money is, or can the money be cheaper?
Exactly, and dilution for our current shareholders. Where it's a game of trying to minimise your dilution before you get into cash flow. Look, there is a disconnect, not so much in copper, certainly not the producing copper equities, although there are some that are trading quite cheaply. The vast majority of them are trading like gold used to trade at, back when I was working in the gold industry, significant premiums to their NPV and all of that sort of thing in the producer level. That hasn't yet trickled down to the junior end of the market. And so we are fundamentally cheap, even if you have a more conservative view on where copper price is going to go. A lot of equities in the junior space are cheap, and a variety of reasons for that. But the generalist money hasn't yet started to flow down. But what we're seeing, and what I saw when I attended the BMO conference in Miami, was the feedback across the board was we want and need more copper exposure, and it's just very hard to find projects that we believe can be built in the short term, and we are definitely one of those. Then you overlay the challenge that we have, which is lack of liquidity. So people are wanting to give us money, and we're not wanting to take it. We're financed for all of the work that we have going on at the moment. We can deliver our resource upgrade. We've got several other work streams that we're doing, which are project development. So we have no need for money right now, but sometime before the end of the year, we'll be looking at our options.
And so what you kind of referenced it there, you said, obviously, there's a few reasons why perhaps people aren't coming in now. Is that a case of slight confusion? So there's a bit more macro, if you don't mind. People are still holding cash because they're a bit nervous about the economy, I don't know, energy prices, food prices, whatever it is. Disposable income is got a little bit constrained at the moment, and maybe investing's taking that on the chin for now, or do you think it's something else?
Well, on the institutional side, I think it's more to do with they really want to invest in things where they have a clear line of sight on cash flow. It's obviously more speculative to invest at our end of the market, and once the value dries up in the producer end of town, they will obviously start to look further down the pecking order, as I describe it, into projects that are more risky. And what they're going to find is there is not very much to invest in the copper space. And so, it sometimes takes a little time for that to flow through. But I don't think it's a lack of cash available. There's plenty of money available. And there's, you saw the announcement by Legal and General, one of the fund managers there, that there has to be more investment in mining. And, the global investment community has to do that. But I think, from the past boom, they're taking their time, having learnt from the mistakes they made in past bull markets. And I think we're starting to see that slowly change.
But do you think there's a kind of catch-22 here? Because the big instis, they need to come in big blocks. They need to place big money, but they also need the liquidity to be there to be able to trade in and out. But the retail or family offices just aren't there at the moment, and that's the kind of the roadblock, as it were, for now. So come back to that question I just asked, which is, what do you think is stopping people? We're getting lots of signals from the JP Morgans of this world, an example you just gave as well, where it seems obvious that now's the time to move. It's kind of like a March 2020 moment again. It seems obvious it can be a lurch forward, but people, fear to tread, it seems, at the moment.
Yeah, I don't have a good answer for that. But what I would say is there's a very clear disconnect between different markets in the world. If you talk to an Australian company and the ASX, it is awash with retail money willing to invest right down the pecking order. It's very different in Canada and in London at the moment. But I think we're going to start to see that change, and we're already starting to feel it a little bit, although we don't yet have the clear evidence of it. Okay,
well, it was meant to be a quick call, so I kind of wandered off a little bit there. That's good news coming out of Chile. The government showing intent, clear signaling to the market that they are not for nationalisation. They are interested in foreign direct investment, and that's got to be good news for companies like you. So I appreciate you sharing that with us. Keep in touch with. So how much more infill drilling are we doing? Or how many more results?
That's the first 3,000 metres of a 32,000 metre program. So we've got a lot of drilling to come. It's going to be pretty regular. The Mamix extension, which was that extensional drilling that we talked about previously, is starting this week. So, we're going to start to get more information on that. And then we can start to paint the picture as to, okay, well, you can join the dots between the drill results and understand why we're quite excited about this drilling campaign. And then in the background, look, there's a load of technical work for the feasibility study that's underway. We'll deliver some phase 5 met results, which is a huge de-risking milestone, but often is overlooked. We can talk about that. So look, I think we're going to be quite a lot back on with you, talking about the things that are going on in country.